But if you're stuck in the business, you've lost all of your freedom.
It's the big freedom fallacy.
So what is it you do then for business owners?
I help them prepare themselves, their team, and their business for the fact that they are not immortal. I think there's 3 exits. So there's always...
I have to say that the first 2 sound amazing because as a business owner, you build it up. But what are you doing it for?
If you were to be unable to work in your business tomorrow, what would happen to your business? And that's the kind of exit planning that I'm talking about.
How much does this actually impact the saleability of a business?
Oh, that's really easy. If your business is like that and completely dependent on you, it's completely unsaleable. If your business is your pension, start building the insurance policy today, please. I think most people don't realise that.
Christine, welcome to the Ambitious Minds podcast.
Thank you for having me.
I'm going to start with a personal anecdote here. I've been speaking to a number of clients in the last few years, and the topic of selling their businesses has been coming up more and more and more. Is this something that you're experiencing as well?
That's a difficult one because this is what I live and breathe. I mean, this is like I'm a sponge and I soak it up. So I see it every single day. I think what's surprising and changing right now is the average age of a business owner is increasing. They are now, as they age, as I'm aging even, now considering their own mortality. And so they'll be thinking about the sale in more immediate terms. And of course, yes, we had the political change last year, and it's the 3-letter word that was on everyone's lips: tax. Tax isn't going to kill you, but actually, how you sell tax efficiently is one of the things that's coming up much, much more often.
So, what is it you do then for business owners? You say you sort of live and breathe it, but maybe give us a bit of background and explain what you do.
Yeah, sure. So, I help business owners who've been typically going for more than 10 years, and I help them prepare themselves, their team, and their business for the fact that they are not immortal, which sadly most people don't like to think of. And most people think about selling their business and then they say things to me like, I'm not ready for that yet. Like, I'll think about it one day. But if you were to be unable to work in your business tomorrow, what would happen to your business? And that's the kind of exit planning that I'm talking about. I think there's 3 exits. There's getting out of the day-to-day, because frankly, there may be a day where you can't work in the day-to-day. In fact, in 50% of cases, a business owner will find that they are not able to work in their business day-to-day. So it's a really good thing to plan for. So that's the first exit. Then the second exit is actually handing over control. So not only are you not there, you're not actually the controller. You might set the strategic objective, but you are actually running a business that isn't just operating without you there on a daily basis, but could operate whether you're there or not. And at that point, you're actually ready to transfer ownership. And that's the third exit. So there's always out of the weeds, out of control, out of ownership.
I have to say that the first 2 sound amazing because as a business owner, you build it up, but what are you doing it for? And I think that's the sort of the big philosophical question. For me, the way I think about business is you start a business to then give you the freedom to do what you want. But if you're stuck in the business, you've lost all of your freedom. You might have the finances that come with it if it's successful, but you don't have the time. So creating the position where you take yourself out of the business and you get your time back, for me, as somebody who's not a business owner, but that would be the idea for me, would be to create a business where I'm not necessarily the person that the business depends on. So I can then step away and enjoy the sort of the fruits of the business.
It's the big freedom fallacy. So most people go into business because they've either invented something or they've got an idea to do something a little differently. Like, how many people are in a job that might be listening to this that have genuinely thought very frequently, I could do a better job than this.
Yeah, a lot.
So they take the leap and they think that after a bit of graft, usually, that they'll have the financial freedom and the time freedom. And of course, then there's the location freedom, because if you have the first 2, then you've usually got the third. But the fallacy is that because the business is completely dependent on you, all the controls are built into you as the business owner instead of into the business. you don't have any freedom at all. You certainly don't have the financial freedom, because as you're growing, the business sucks up more cash. Therefore, you're the one that's there at midnight on a Sunday because payroll needs to be done for everyone to get paid on the Monday. As you're signing the biggest check of the month, you're the one that gets paid last. If you get paid
Yeah, of
at
course, yeah.
all. I mean, the average business owner in the UK for an SME business, their salary is less than 50,000. So there's this whole fallacy of, if you're a business owner, you're a greedy rich fat cat. I don't know many business owners that are like that. And then so you don't actually really have the financial freedom. And from a time freedom, well, I refer you back to being there at Sunday at midnight doing the payroll, because most business owners are actually doing what I call invisible work. It's not stuff that they'll hand over to anyone else. But equally, it's not, it's stuff that still needs to be done that everybody else just assumes gets done. And it's a bit like if you were younger and you had a mum who kept your room tidy, then the clothes washing fairy would come into your room and it would take all the dirty stuff away, and you would find clean stuff in your drawers. And it was almost like every time you open the magic drawer, there's clean underwear and clean socks. And most business owners set themselves up to be the laundry fairy.
Yeah.
They literally clear up after everyone rather than become a nag. Which is what most of them are afraid of.
We had this conversation before, and we were talking about maybe the reason why entrepreneurs get to the successful, like starting a business, is because they are control freaks.
Yeah.
And that control freak sort of remains in them as they build and scale the business, when actually they should be delegating more. And it's I'm a control freak, so I really struggle with delegation myself. But it's a skill that every successful entrepreneur, and you mentioned this earlier on about people have the perception from the outside that business owners are these fat cats, they've got all this money, but the majority don't.
No.
And I think that the ones who have managed to scale their businesses up to the position where they are considered to be the rich, successful business owners are the ones who have probably been very successful delegators as well.
It's one of the reasons why I admire some aspects of Richard Branson, for example, is he is the master of delegation to really good people. And one of the things that he's always done is, I think one of his famous quotes was, train people so they can leave, treat them so that they don't want to. I'm very lucky. An old girlfriend of mine actually worked directly for him.
Really?
And she said that's exactly what he was like. But she tried to resign 3 times. In first 2 times, he just squirted it with a water pistol and then said, come back to me when you really mean it. But the third time, looking back on it, she said the reason why it would have been the wrong thing for me to do at the time is because actually I was just fed up with the job. It wasn't like I was going to something. She didn't, the third time when I resigned, it's because I was going to something, and he was going, yep, job done. You're off to a better place. If most business owners thought like that, then the world would be a better place. I'll use an analogy. This came from the great Harry Hill, master entrepreneur. He has this thing about stalagmites and stalactites. So stalagmites build up from the ground, and they're literally water drips down and it builds these mineral deposits. And so the stalactites are always pushing, the mineral deposits build up. So it's always pushing the thing on the top up towards whatever the source of the minerals are. Most businesses don't work like that. Most businesses work like stalactites, where the water drips down and then hangs off the stalactite. And when you've got a business where the people in the business actually hang off the leadership, then what they're doing is the leadership is creating a dependency. And I mean, that is always just going to lead to consolidated bottleneck decision making, people hanging them off, like I need you, boss. I can't operate without you. I can't make decisions without you. I'm constantly seeking your approval. Whereas the opposite is when you've got people pushing you up, good people underneath you, you elevate yourself, and then everybody rises. And it's, like I say, it's the one thing that I always admired Richard Branson for. A lot of things I didn't admire about him, but that was the one thing I admire him for, was because he was always talking about elevating people to the highest point of their potential.
Yeah.
And not pushing people into the highest level of incompetence, but actually expanding their competencies.
And also giving the people below you the freedom and the empowerment to challenge you as well.
Yeah.
Because if you're Richard Branson and you're hiring people that are only better than you, then you want people to be challenging you and telling you what they think about what you should be doing, as opposed to this sort of authoritarian, rule from the top, which you sometimes see with businesses. But how much does this actually impact the salability of a business?
Oh, that's really easy. You go from, if you're the single point of control, we discussed earlier, usually single signature on the bank account, the only one who can make any real decisions. If your business is like that and completely dependent on you, it's completely unsaleable. The only people who will want to come and buy it will be people who want to buy some capacity. So I always say a buyer is looking for one of three things. They're looking to buy your customers, buy your capability, or buy your capacity. And if the business is owner dependent, then someone's going to come along and buy your capacity. They're going to bolt it onto their own management team, and they're going to get you for a knockdown price.
Yeah,
so there's a percentage of salability, and then there's a percentage of your true market value, or what I would call your full market value. So and a balance between two of those is usually the optimal exit value for most business owners. But they're usually leaving something on the table.
Yeah.
And they're usually doing it without knowing what they're leaving on the table. And then they find out after they've sold.
That's the big regret, right?
Oh,
It's when you find out too late.
Yep.
And I've actually come across clients. I work in the wealth management industry, so often it requires a liquidity event.
Yep.
Now, in the fortunate position where people have been growing a successful business and they've been working with a wealth manager for a long time, they come to you and they say, "This is what I'm thinking about doing." And those are the best conversations, because that's when they come to you as a trusted advisor and they say, "I'm looking to do this. I don't know what my business is worth, but this is what I'm looking to get." And then we can use our resources and introduce them to people and say, go to corporate finance or go to people like you, for example, and say, here's someone here who can help you on that next 2-3 year journey. The people where the regret is are the ones who have had the liquidity event. They don't know what their business was worth in the first instance. They've maybe seen changes happen to their business once it's been sold, and now they also don't know what to do.
Yes, yeah,
and that's a big factor too.
Yeah, I see regrets really around those two of those things. One is the realizing that they could have got so much more for it, or that this 5 years that they've spent trying to make it worth more, all the things that they've been doing haven't actually made it worth more at all, and now they're selling because they're tired or they're fed up. So I wouldn't say it's a fire sale, but it's a more immediate sale than perhaps they would have. And the journey has been harder. Going through the sale process is it's physically, mentally, and emotionally stressful.
Yeah,
I've been through hundreds, so I know what it's like.
Sorry to stop you for a second, because I've got a few people that I'm thinking about at the moment who are approaching this due diligence phase. They're in negotiations right now.
Yeah.
What does it look like, and how should people start preparing for this?
The phrase "gird your loins" comes to mind. If I was to just give one piece of advice around due diligence, a buyer wants to look at what risks they're taking. So they're going to ask every question you can imagine, and a dozen or more that you couldn't even imagine being asked. So there's always two things that happen in due diligence. I'm going to expand that to three now. There's three things that happen in due diligence. The seller always asks, what on earth do they want to know that for? The seller also gets to the point where they say, when is this going to be over? And the third thing is, aspect of it is, the seller is going to have some kind of emotional crisis where they're going to take absolutely everything personally, unless they are prepared. And because most of them have never sold a business before, so they never go through this process. I mean, the lucky ones that only go through it once, and I've had a couple of clients who've had sort of false starts. So they've gone through a process before they've come to me. And then now they're going through a second time. And the words that come out of their mouths to me are, I literally can only do this once more.
Yeah.
Like you've got to make this work,
Yeah.
because there's no way I can do it again. I mean, the last
I've
time
had
nearly,
this.
yeah.
I'm never doing that again.
And so actually doing all the preparation it falls back to that whole, am I selling my business for the right amount of money for me? And knowing what it is that I want and then what I need. So there's always two numbers. I often hear people talk about A and B numbers. What do I need to have the minimum lifestyle? What do I really want to have the optimal lifestyle that I've been dreaming of while I've been putting all this stress, sweat, and sacrifice into my business? And so if you know the journey, typically you've also now know your real value. You also know where, from a saleability perspective, so if the full market value is up here, but your saleability is kind of down here, but you're choosing to go to market with some gaps that you're aware of. So you're aware of how much that's going to diminish the value. But that's fine, because you also know the effort it's going to take to fill that gap. And, you look at the gap, you look at the effort, you look at the difference in price, and you think, yeah, I can live with that. Those are the people who can get through it and go and have their once of a lifetime round the world cruise with not a moment of lost sleep or regret. People who go into it thinking, well, someone's told me my business, they've got a wet finger in the air, and my mate down the pub told me my business was worth this. And then they go through the due diligence process where they've already halved the value of the business in their own heads. Now they're going through the due diligence process, which typically you can see the tailing off of the value. Or an increase in the earnout, or the factors that will increase the earnout. And you've got someone asking you questions literally every day for at least 90 days. I've never seen a due diligence process take less than that. But you've got, this 90 days of what feels like someone literally picking at your skin until you are flayed. And that psychologically, that's what it feels like.
Yeah.
And you got to go back to the gird your loins, because you've really got to be quite tough. But if you know that's coming, you can mentally prepare yourself for it. If you don't know it's coming, then buckle up. It's going to be a hell of a ride.
Yeah, you are going to do it once and then never want to do it again, which is this experience actually I had with a client recently who they were being bought by private equity, and the private equity company just came in and they had an army of lawyers.
Yep.
And he was like, I never want to have to speak to a lawyer ever again in my life.
Yeah. I think most people don't realize that particularly if you're a smaller business being bought by a bigger business, and especially if you're being bought by a business that's maybe been on the acquisition trail for a while, so therefore they've got a well-worn process. So when they bring in their 150 lawyers, each lawyer is only doing like a little sliver of the process. So of course it's like going 20 rounds with Mike Tyson and his 20 clones. You get tired every round, but the boxer that comes into the ring to fight you is completely fresh and you haven't even scathed them, because they've got hides like rhinoceroses. It's not personal for them. It's only personal for you. You're constantly in the ring. And most people, by the time they come to about 3/4 of the way through the due diligence process, they are completely needing
surrendered
therapy. Yeah. And then they'll start to agree to terms and changes in the terms that they would never have done.
Yeah.
And the big regret,
psychological warfare, isn't it?
Yeah. And so if you can prepare yourself for each of the slivers of due diligence and just get your ducks in a row.
Yeah.
You know what the annoying thing is? You as a business owner can do this in 15 minutes a day, and you don't even have to do it. You can literally get a team of people that you're already working for you, and all they need to do is maybe put 45 minutes a week aside for doing this type of work. I guarantee
in
you,
the preparation phase.
in the preparation,
Yeah.
no. Yeah. So even today, so any business owner, it's a free tip. You can, if you understand the due diligence journey, you get the person who's typically in charge of that section of the due diligence process. You get them to put 45 minutes a week in their diary where all they're going to do is work on preparation for due diligence. Within 6 months, every single one of those departments will be fully up and ready. You'll be there, ready to go, and the whole experience will be, I'll use another analogy. You know, the sleeping on a bed of nails.
Yeah.
Is always going to be uncomfortable. Without preparation, it's going to be like sleeping on a bed of 4 nails. Really bloody uncomfortable. Whereas with the preparation, it's going to be like sleeping on a bed of 1,000 nails. As long as you know how to get on and off the bed, you're going to be fine.
How many businesses have you worked with over the years?
Oh, hundreds. But I've been through over 100 actual exits. And I've done it all from inside the business. So I'm not a broker, never have been. I'm not a lawyer. I have a law degree, but I did the interesting bit of law. And I'm a qualified accountant, but I don't give tax or accounting advice. But what I do is during the sale process, I'm generally there right alongside the business owner. I will be the person who they say, God, how long is this going to go on for? I'll be the one that is telling them to keep calm, that I have the pre-due diligence call conversations with, which is, this is what's going to happen. This is how you keep control of it. This is how you respond to any questions that you have asked. Quite often I'm in those due diligence meetings.
Yeah, okay.
I'll be there with them when the lawyer sends them a whole load of documents they don't understand. And frankly, to be honest, yeah. So not only, because a lawyer will only explain what the clause is, it will explain the consequences, and they also don't look at it all in the round. So quite often you'll end up with a sale agreement that has literally been put together like slices. And it's, from a mental perspective, it's the equivalent of going into a library and tearing one page out of 100 books. Like, you put it all together and it just doesn't make sense because it's completely out of context. So one of the things that I do a lot of work with the business owner is looking at what it is that they really want at the end of the process, so we can work backwards to get them what they want. Otherwise, what starts off as the initial offer ends up being a deal that would have been a no deal if they'd known that's what they were going to sign up for on day one.
Yep.
But by the end of the due diligence process, they're physically tired.
Mm-hmm.
They're mentally battered. They're emotionally drained. And frankly, most of them will sign up anything just to avoid having to go through any further.
Yeah.
Sad.
Have you ever started and built your own businesses?
Yes. Yeah. So I was very young when I first got a bit entrepreneurial. But my first, what I call my first grown-up business, so this was a full-on business, not a side hustle. I started that in the early 2000s with my first redundancy check.
Okay.
So I was very lucky. So I did 3 soul-sucking years in retail banking. It's like 3 years I'm never going to get back. And then I went into the military, which was fabulous right up until they sent women to sea, because I get really chronic seasickness. And at that point, I had plan A, which was join the Navy, stay in the Navy forever, and live happily ever after. Because they didn't used to send women to sea. And so when I left the military, during my military service, one of the best pieces of advice I ever had was just go and get a qualification. And I had a chip on my shoulder the size of Saturn about never being able to do A-levels or go to university. It's completely ridiculous now, I realise. So it was really obvious to everyone around me. I was quite angry about the fact that I felt like I could do a better job than I was positioned to, but I was constantly hitting a ceiling caused by not being qualified in anything. So I went to night school, qualified as an accountant, and then I got my first job as an accountant. which really did it had 2 lines on the job description. Keep us legal. Boring stuff. So I processed the life out of it to make it all it was a long time ago, so automation was a very different meaning to the word, but I made sure that it was just like process driven, I had it all in my diary. And then because the second line was find ways of adding value to this network of businesses, and there was like 40 businesses across 14 different time zones, so there was a lot to get your teeth into. And within the first 6 months, I discovered that the reason why they wanted to add value to the business was because the last generation were selling because the next generation weren't interested in running the business.
Interesting.
So we literally exited 40 businesses in 4.5 years.
Wow.
And it was the most amazing apprenticeship. Anybody who's been through a business sale, they know that they might turn up all bright-eyed and bushy-tailed thinking they're going to sign the document at midday, and then they know that, they're still going to be there at midnight.
Yeah.
So we had lots of long nights and all of that kind of stuff, but we went through every single exit you could possibly imagine. We went into a creditors enforced liquidation. We put some businesses into administration because, frankly, there was no value in them. We sold them to trade buyers. We also sold to private equity. And we bought companies to bolt them together to make it actually worth something and saleable. We bought one company which was basically buying a management team for that company so we could split it off from the kind of head office function. And I switched the lights off and wrote my own redundancy check at the end of it. And I took that check with my business plan to the bank, and I asked to borrow a lot of money to be able to...
How much?
I borrowed 6 million.
You borrowed £6 million?
Mm.
You must have had an amazing business plan.
Well, I like to think it was amazing. But you see, I was so naive.
Did you borrow that as well? Did they give it to you?
Oh, I borrowed it, yeah, and they gave it to me. Oh, my God, no, 3 or 4 banks were literally full. I was being taken out for lunch, left, right, and centre. They literally almost threw the money at me. And it allowed me to start my first grown-up business. I did go out and raise some shareholder money. So I raised $1 million and on top of my own money, and then went to the bank and borrowed the 6 million because we were buying capital assets.
Okay.
So then we set...
So you were buying existing businesses?
Yes.
Okay.
So we did a buy and build process. And then once we'd bought enough, we then started to progress with growth. And we took over effectively failing businesses, so highly undervalued businesses. Yeah. And because I'd just been doing this for 4.5 years, like I just knew how to do it. It was amazing 3.5 years. But at the end of it, God, I was tired.
I was going to say, buying a distressed business or multiple distressed businesses requires a hell of a lot of work to turn it around.
Yeah. Plus, the actual purchase from a distressed seller it's emotionally draining and demanding because you've really got to manage you've got to manage the whole process. And I didn't have reams of lawyers behind me. So I was determined that this was something that I could do and I could add a lot of value to it. Looking back, I would probably not do it the same way. I certainly wouldn't take so much on my own shoulders. And funny enough, while I was actually still building that business, I started another business kind of by accident. And when I exited the first business, so I had my second business already running. And again, that was build. But I was doing that organically. So I said, literally started it from scratch and built it up and then sold it a couple of years later. So
wow. And now you're also, so you sold 2 of your own businesses, but you've been through the buying process so many times.
Yes. Yeah.
And also the selling process so many times.
Well, I've actually helped past clients buy so that they can sell.
Yeah, of course, yeah.
And it's one of the things that's kind of missed is that sometimes the best route for your exit is to acquire, especially if you've got a very owner-dependent business and you know that your existing team is never going to step up in time. So buying a business that's already self-managed and then bolting the two together, where you can absolutely step out of the weeds and become, the non-exec or the chairman. And let's face it, as a business owner, once you get through the struggle phase, don't you want some of the glory phase?
Yeah.
But most people don't actually kind of get the glory bit which is the financial freedom and the time freedom, until they've sold.
Yeah.
And of course, by then it's kind of, they never get the enjoyment of running a business.
This whole thing, my business is my retirement. Why do you have to wait until your retirement to enjoy your business? And also, it may not be your retirement, which is a big wake-up call for a lot of people.
That's the big thing is, if you're saying my business is my retirement, then it ain't worth nothing. Sorry, that's terrible English, but it isn't worth anything. I can already hear my English teachers. It isn't going to be worth anything if it's completely dependent on you. And here's the worst thing. I'll go back to a statistic that I said earlier in this conversation. 50% of business owners leave their business because they can't work in it anymore, either because they've become disabled or unable to work, or they've died. Actually, to be honest, most of them, it's usually a death in the family or terminal illness diagnosis of a spouse that really triggers this. And therefore, not only have they got a family that's now either grieving your loss or now trying to look after you, they've also got half an eye on a business that is no longer giving them an income at the point where they need it the most.
Yeah. So
if your business is your pension, start building the insurance policy today, please.
Yeah.
Yeah, it's a bit like I was talking to an estate planner, and there's still a majority of people in this country do not have a will. Like, you can write your own will; it doesn't cost you anything. And frankly, if you haven't got a huge number of assets, don't spend any money on it. Go and Google will formats, but please, just write a will,
so you know who it's going to.
Because then at least you've got some certainty.
Yeah.
But most people don't, and it's the same with the business. I always say there's effectively a business will that you can write, and that's the kind of thing that needs to be in place. Because if I walked out of here tomorrow and I got hit by a bus, then I have plan B. My clients would be sent to someone else. My staff would know what to do. But when I talk to most clients, actually, or most prospects, when I say to them, well, what would happen if you literally got hit by a bus when you finished this telephone conversation? And they're like, I don't know. And it's all right for you. You'll be dead. It's everyone else that has to pick up the mess. And
ultimately your family, who are going to be probably the beneficiaries of the shares of the business, who are now inheriting a business when no one else knows what they're doing.
Yes.
What a mess to be left in.
Yeah. And the one thing that I will always say is, like, it's single signatures on bank accounts. A client of mine just recently, or past clients, came across the situation where, having died, it took 9 months for the people within the business to actually get another signature added to the bank account. That's 9 months where the money in the account is effectively frozen. They were very clever and they did a lot of workarounds, but it was the one thing that he just never did. He just never actually made any changes to that one aspect of the business, which is when cash stops flowing, so does business.
Yeah, of course. I just want to use it as an opportunity to talk about if you are running a business, how do you start preparing also for like building your wealth outside the business? Because unfortunately, I sat down with a client, a prospect recently, who he's not actually going to be a prospect, which is the unfortunate thing, because he is a business owner and he is still in the day-to-day of the business.
Yeah,
he's in his late 60s. But he had the glory days when he was in his 40s and his business was turning over a lot of money.
Yeah.
He has an amazing house. He had a nice lifestyle. He's got a second home. He was skiing every year. He was living a very, very lavish lifestyle. That was the time for him to be taking money from the business and moving into his personal name.
Yeah.
And you can do that tax efficiently. You
Yeah.
can do that via pension contributions into your name. If your partner is a shareholder of the business as well, or a director, you can be doing it for them as well. He's now got to the point where he is the dependent in the business. And now, where he's got older, the business just isn't as profitable as it used to be.
Yeah.
He's one of the single people running it. And all the money that he had before is gone.
Yeah.
And he has a business now which is dependent on him. He doesn't have any provisions outside of it. And he just has to continue working now.
Yes. Yeah.
Probably, and he said, until the day that he drops.
Yep.
And that is really disheartening to hear that, because somebody along the line hasn't given him proper advice.
Yeah.
Or he hasn't sought the advice, or
Yeah.
he's just not, even if it's your finance director that should be doing it for you, or somebody, your accountant, just saying, all these profits here, rather than just taking it all out, why don't you squirrel some away into your pension?
Yeah.
It's going to save you corporation tax if you do that.
Yeah.
But make sure that you're making provisions along the way, so that you can, if something bad does happen, you can step away and there is a source of income for you when you are over the age of 55.
Yeah. And there are a number of mechanisms for you to do that. You know, it isn't all, it isn't just purely, you know, pay some business contributions to your pension scheme. There are a whole load of things that you can do. And on balance, it's always going to be a combination of activities.
Yeah.
First of all, you got to get that business. Well, obviously, I think it's probably too late for this individual, but you got to get your business so that it doesn't depend on you.
Yep.
So even if you're only working, actually, it's a classic example. One of my clients, when he first came to me, was working 85 hours a week during the peak season. He had a seasonal business, 85 hours a week. And actually, that started to gather momentum in the off season as well. And when he realized that he was being basically he was running around. He had a broom in one hand and he was trying to write proposals with another, and then he was driving a van and all this kind of stuff. And when he actually sat down and we looked at how he would get out of the weeds, you know, he now has multiple businesses, which has completely deseasonalized his cash flow. So his cash is fairly steady. He only works 15 hours a week, which means he can now play a lot more golf.
Yeah.
And funny enough, golf is a great place for him to network, to build his business.
Yeah.
So, you know, he's just win, win, win. So now he's actually managed to spend some time deseasonalizing his business. He's got multiple businesses. He's only spending 15 hours a week running them. He's also now looking at, has been over the last few years, looking at how he utilizes the surplus cash from those businesses. So with his first business, as he started to build surplus cash, not only did he build that business, but he actually went and bought another.
Mm-hmm.
So, but now he's got 3 businesses that are generating net positive cash flows. And so now he's always looking for, how do I build security?
Yeah.
Because there's financial freedom, and then there's financial security.
Yeah.
The two are often very different, because financial freedom can be momentary. Financial security is...
Yeah, that guy had financial freedom.
Yeah.
Not anymore.
And actually, you know, financial freedom is like being able to ski down black diamond ski runs and just bomb down and not worry about the speed. You know, financial security is staying in a really nice cabin where a maid comes and makes you hot chocolate at the end of every run. So, you know, the two are very different. And most people, if they get a lot of financial freedom when they're very much younger, they don't worry about the financial security.
Yeah.
I wish I had listened when I started work when I was 16. I wish I had listened to the person who advised me to make pension contributions then, because my financial security would be on a completely different level to what it is.
And you're creating a legacy for your family. Mm-hmm. Yeah, if you have a family, and that's one of the reasons why you're building your business, you're making the assumption that your family might want to inherit your business or work in the business. And that isn't always the case either. I have so many conversations where parents are disappointed that their kids don't want to be in the business. The kids having seen their parents day to day growing up, working until midnight or later than that, early starts, not paying them the attention they wanted. So why are they going to want to go into the business? But then if you want to create a real legacy for your family, then finding a way to build that outside of the business is going to be one of the most effective ways to do it. And if you can sell your business, then fantastic. But
absolutely. I mean, one of the most tragic things I see, and I see it sadly quite often, is the family business where, let's say, granddad founded the business. And then dad went to go and work in a business, and now the sons are working in a business. And I'm very typically making this male because I typically work with men. So, but granddad didn't make any pension provision for himself. So when he retired, i.e. stopped turning up for work every day, he's still drawing a salary from the business even though he's not working in it. So now dad's retiring, or should I say not turning up for work every day, and the sons are running it. But now, and granddad might have passed away by now. But now dad's a drawing salary on a business that, like the example that you gave, in the glory days, we're actually making quite a lot of money.
Yeah.
But then as time's gone by, things have got tougher, and therefore the margins are less. There's more competition. So now you've got sons, let's say 2 sons, who are both working in the business, trying to draw the same salary as dad has or equivalent wealth. Well, they're still paying dad because granddad didn't actually make any pension provision because everything was in the business, and he didn't sell the business. He gave the business to his son, and that just got taken over. And now dad has got no mechanism of getting the money for the business out because his sons are both working in it, and he's drawing a salary which is crippling the business from any growth investment as the margins get less and less. And then you wonder why less than 4% of family businesses actually get to the 4th generation.
Yeah.
Because if they'd made pension provisions or any financial security provisions outside of the business, and we're talking about typically really tiny amounts of money that really change the dial.
Yeah. And I use this word all the time, but compound over time. People don't understand, I don't think, the concept of compounding and how influential that can be if done over a long period of time.
Yeah.
So starting with smaller amounts early is way better than trying to, at the end, play catch up.
Yeah.
I've got a quick question for you because you mentioned that you work mostly with men. Is it that there are less female business owners? What's your sort of observations and take on it?
Well, I'm really old. So, my next birthday, which isn't that far away, is the big 60, and I've been doing this for nearly 40 years. So there are many more women coming into businesses today. They're still fewer. And I tend to work with engineers, technologists, so, mainly because I've got a lot of male traits myself. One of those is being extremely direct. And so typically because of the industries that I work with, there are very few females in those. And most of the men that I work with, it's very personality driven. So if you can't take my directness, we're probably not going to work very well together. It is funny because I've had female clients and I've loved working with them because they really strike the balance between I'm not going to be a slave to on average. They're not going to be a slave to their business because they've got other things that are important to them, but equally they know how to work well in as a team. And so I would love to work with more women. It's just there tends to be fewer of them
in the industries where you are mostly advising.
Yeah.
And also I think there is probably a bit of a skew in terms of there are more younger female entrepreneurs than older female entrepreneurs.
Yeah.
Which, I mean, that's just traditions, right? It's what does your ideal client or typical client actually look like?
So taking the male bit aside, most of them have been running their business for more than 10 years. They're usually in their 40s, 50s or 60s. I had a client in his 80s, still didn't accept that he was going to die one day. Actually, he's in his 90s now and he's still alive.
Good on him.
And they've usually got more than about 20 staff because they have to have someone to hand over to. And the business has to have the capacity to take on board a senior management team. So a lot of people will say to me, "Oh, I'm thinking of selling my business, but I don't really want to spend loads of money on getting a whole, expensive board of directors." And that you don't need all of that to make your business saleable, but you do need to get out of the weeds yourself, because selling a business is a full-time job. And if you've already got a full-time job, then three things are going to happen. The business sale process is going to distract you from the day-to-day. And then the day-to-day is going to distract you from the business sale process. So the sale process is going to falter. And it's going to be more difficult for you to sell and easier for the buyer to see more risk. The second thing is that you're distracted from the day-to-day, so the business actually itself is going to start to falter. So any forecast that you might have put for your sale documentation is now not going to be achieved, which means the buyer is going to see more risk. And then the third thing is that most people can't cope with 2 full-time jobs, demanding full-time jobs. So you are going to break. And I will tell you from experience, it is not worth it. You cannot buy time and you cannot buy your health. And frankly, you're probably going to spend more time mending fractured relationships that wouldn't be fractured in the first place if you didn't try and do those two things all on your own. No man is an island. Try and do it all yourself, you will break.
Yeah, that's a typical male trait, though.
Yeah. I hate those kind of gender stereotypes, but unfortunately, yeah. It's why I always say, like, I have a lot of male traits because, my first business, even though I learned all the lessons, and I learned them on someone else's buck, I mean, which was great, still fell into them the minute that it was me that was the business owner.
Yeah.
Because, if a business is usually someone's biggest financial asset.
Mm-hmm.
And so therefore, it would be a bit like me giving you access to my bank account and say, just run my life for me. Because now I have to really trust you, because now I don't have access to it and you have access to it. It's a bit like, I think in the 80s, there was a couple of films around very rich people and trust funds, where the very rich people would go, I need some more money from my trust. And the trustees would go, don't think we're going to give you money to feed your drug and party habit. And it's I really understand that now, because actually from a business owner perspective, the minute you hand over control, you're handing over your potential financial security, your potential financial future. And that link psychologically, is a really difficult one to break.
Of course.
And it's why I always say, build the controls into the business, not into the individuals.
Mm.
So if you've got a business that's got proper controls in it, doesn't matter who comes in, because the checks and balances are already there. They're built into the processes and they're built into the fabric of the business. But the big mistake most business owners make, I find, is that they recognize they need to get out of the weeds, because they might have heard me make some comment about it. So they then go and hire an MD, and then they go, there you go, it's all yours, sort it out. But they don't leave. And so the MD tries to start making sense of things, but the owner is still sideswiping and sniping, going, well, I wouldn't have done it that way, and I wouldn't have done it that way. And then, steps in and takes control for a day, and then steps back out bitterly complaining to everyone who will hear, like, bloody hell, why can't they do it? I mean, for goodness sake, it ain't that complicated. And I've even heard myself saying about my accountancy qualification, if I can do it, anyone can do it. It ain't rocket science. What I've discovered is the failure rate for accounting exams is really, really high. So actually, I should probably give myself more credit for the fact that I actually got through it, first time passes. But for me, it didn't seem difficult, because quite a lot of it was common sense. What I've come to realize is that common sense isn't always common practice.
Exactly. What motivates you now?
I remember when we emailed about this, and you said about what's your ambition, what drives your ambition. And I go back to I'm getting really old. my ambition and drive is really more for other people.
Yeah.
Like, I've achieved everything that I ever wanted to achieve. I mean, there's still a few things on the bucket list, but like, if I died tomorrow, I'd be genuinely satisfied that I'd lived a good life. So now my purpose is really seeing other people achieving their potential. And I do that a couple of ways. So seeing my clients go from 60 hours a week of dirge to being able to take their first holiday, for getting a card off their wife saying, "Thank you for giving me my husband back." For working with their teams, who I got sent a cake which I had to give to my next door neighbours because it was quite large. I don't know whether they thought I had kids and things, but they sent me a cake saying thank you. Like, it's a really great place to work now, and those are the things that you get a real kind of sense of warmth and purpose out of those. I do volunteer with a couple of things. One of them is I have a very, very tiny little part of a program called Project Remake, and it helps people who've been incarcerated use entrepreneur skills to escape the cycle of reoffending. And I'm going to give a shout out. So the guy who kicked this off and really drives it is a retired judge called Camille Khan, great cricket fan. Like, if we have a 50-minute call, we'll spend 45 minutes talking about cricket and 5 minutes talking about Project Remake. And it's really building. It's been going for about 12 years, I think, but it's really building some momentum now. And they partner with the prisons, with universities, and with people like me, entrepreneurs, to provide this kind of three-way mentoring service plus education, and that, seeing my first mentee, who was 3 or 4 years ago, and I'm still in touch with him, and actually seeing what he's doing and how his life has been turned around. And it's got 100% success rate. I mean, the great thing is that it's like really tiny investment compared to the cost of keeping someone in prison, and a 0% recidivism. So literally nobody who's been on the program has ever reoffended.
Wow.
I mean, it's just
the numbers, because I was looking into this recently. Something like 70% of people that come out of prison reoffend or end up back in prison.
Yeah, and I understand all the psychological reasons for that, and it's not because they're bad people. So I mean, it's like less than 1% is like true, what I would call truly evil, and nothing's ever going to stop them. But most people are got there by making 1 or 2 bad decisions and getting themselves into a bad physical location. And some of them just started out with absolutely no hope to start off with, which is really tragic. I mean, I come from a really poor background, but I had food on the table. I had a safe home to sleep in every night. Whilst my dad didn't believe in education for women, we still went to school every day. I had siblings, so we looked after each other, and we were brought up with some core values around looking after each other. Some kids just don't have that, and that's a tragedy. And when I work less, I'll probably spend more time working in that kind of field.
Yeah, that's. I think we come from probably similar backgrounds in that respect, but brought up by the right people.
Yep.
Money wasn't a plenty as a kid, but there was always food on the table. We were taught manners, values, and just be polite when you go to school, work hard, and those sorts of things.
Yeah.
And then me and my brothers are now all succeeding in the things that we're doing, which is a huge credit to my parents.
Yes.
You don't have to be sort of stuck in this socio whatever situation for generations if you teach people the right way, or if you've got the right support network around you.
Yeah. And I mean, my dad was military, so we moved around. So we were effectively community kids, because the if men were at sea, then the women basically shared looking after each other's. They looked out for each other. They looked out for the others' kids. So we really learned to be in that community. That said, for large parts of my childhood, we were completely feral because we were of a generation where you could open the door and you ran out while the daylight was on, and you came back when it either started to get dark or you started to get hungry, and you had this freedom and you took risks, and again, we looked after each other. But I genuinely think that often a question is asked of, what era would you have liked to have lived in? Now, I always say that when people ask that question, what they really mean is, what era would you have liked to have been a really rich person in? And I honestly think that my childhood was frankly in the right era. It was the right time. Loads of things were changing, and we, pre-social media, and we just got on with it.
Yeah.
It was no more dangerous than it is today. And if the danger levels we just weren't aware of, because we had this kind of innocence that I really fear for kids today.
Yeah, and you see it online, and that's the problem. And you see it everywhere, and it's just in your face. The volume of news is now in your face all the time.
Yes, yeah. And what people will say because they're on a keyboard,
of course,
is quite shocking. So it's
unfortunately, we've actually come to the sort of the end.
That's gone fast quickly.
It has gone past far too quickly. But for people that are listening, where can they find you if they want to explore more about the way that you help business owners and a bit more about you?
So my website is christinenicholson.co.uk. There's loads of free resources on there. There's loads of things that you can do today for free to just get started. Including, I've written 5-6 books, can't remember the number now. So you can, all the books are on their website. I'm all over LinkedIn. As somebody said, you must never sleep. No. I have an assistant who does all this stuff like that for me. So Christine Nicholson on LinkedIn. And if there's any doubt about which one it is, I'm Business Mentor of the Year because I've won that 4 times now.
Wow.
So, ironically, I recommended one of my clients to go and apply for some awards because he was bitching and moaning about how one of his competitors had won an award. And I went, because he applied for it.
Course,
you've got to be in it to win it, kind of thing. And when they were looking, they actually found an award and they nominated me for it. And then I told other clients, and they did it. So it was a great mutual benefit.
Yeah. Well, congratulations. And I've enjoyed this conversation. I think a lot of people will get a lot of value out of it. So
I hope so.
I really appreciate your time.
No, thank you.
Thank you very
You've asked some really nice questions. Thank you.
Thanks.